and we're going to talk business. So let's be very clear on the difference between business and hobby. A hobby is something we do, not trying to make any money. We just do it because we love it. A business is always so into a business that takes us to the next level. But we have to be willing to get in there and play by the rules of business. So if you live in an area where it requires a business license, a certification, or whatever, we need to make sure that we're getting those things so that we can legally pass this service on. Okay? A strong foundation is important. These are the basis of your foundation. Your purpose. What is your why? Why are you in business? Is this something you saw that we needed? Is this just something that you saw that we liked? Sit down and identify your why. Preparation is another part of having a strong foundation. Are you prepared to run the business through the startup or any downtime? Do you have 6 months to a year of operational business expenses saved? And you may be saying, nah, why would I do that? Because in reality, it can be up to a year to 18 months before a business makes a profit. Just because money is coming in doesn't mean that you're making a profit. If you're handling your business and you're paying attention to your incoming and your outgoing, you may find that you're breaking even or even hitting a loss. So I advise my clients to at least have, if you're renting a building, at least have 6 months of rent and utilities, at least have 6 months of payroll when you start the business so that you can continuously flow through that low part to get to your high part. Because realistically, most businesses are going to go through a low before they go into their high. If you do something like real estate, car sales, anything that is commission-based, you already know that you're going to probably have a low time before you hit a high time because you're going to have nothing really coming in until you sell that house. But you're still going to have the expenses that you have to have. So definitely you're going to want to have that savings, because if you really want to play the game for real. Don't play the game like you've historically seen it played in our communities. Get you some commercials. Run you some TV time. The average network has a minimum of $250, $350 a week. Get you some airtime. Run you some radio commercials. Get you some billboards. Put yourself where people can't help but see you. From an educational standpoint, does the business you're getting into require you to have any type of license or certification? Well, we already know in most states to do hair, you have to get a license. To do feet, to do anything with the body, you have to get a license so that you're not poisoning someone's system. In most medical fields, you have to get a certification. So while you're thinking about the business you want to go into, see if you need a certification and get it. It's easier to get it and then start the business than to start the business and get shut down because you don't have it. Number 4 for your foundation is your mindset. A lot of us want to be in business because we see everybody else in business. And so Pete sells crabs, so I'm going to sell crabs. Everybody can't sell crabs. If Pete is selling crabs, maybe you should sell seasoning because Pete has to get seasoning from somebody to sell crabs. But that's not where I'm going with mindset. Mindset, it's important that you believe in yourself and your product. If you don't think you can do it, nobody else is going to think you can do it. And you're not. Because people watch you. If you tell me that you fix cars and I go to your Facebook and all I ever see is you talking about your woman cheating, your man cheating, your dog dying, all of this, I'm going to kind of back up a little and not call you about my car because I'm not going to think that you're going to be focused enough to fix it. So we want to have a good mindset. And the most important thing once you get started is having proper business structure. So those who are already in business, I want you to ask yourself, what is your current structure and why did you pick that structure? And you may be saying, because Dr. John on Facebook said I should be an LLC. Well, let's take a quick look and see if you should. Okay? But this is where we're still in the foundation. We're going to go in the structure. Your purpose, when you're saying what is your why, is your why just for income? Do you have a passion for it? Does it improve the lives of others? And does it improve your community? Why does that matter? Because while you're building, there are people that will help you. They'll help you with funding to start. They'll help you to promote. They'll help you to keep going. But what is the business going to accomplish? This is what draws people. If you have a business that will improve the community, then you're going to be able to pitch to the county and the state and different places like improve. It's just something like, let me think of something, and I don't want anybody to be offended. I just got to think of something that really is good, but doesn't matter. If you're going to go sell tennis shoes, everybody loves tennis shoes. Yahoo, tennis shoes. But you see more people suffering from the pricing on these tennis shoes where they're trying to keep up with the Joneses. So if it's a passion, you're going to put your all into it. If it's something you really believe in, that's what you're going to do. So when you're thinking of your business and what you're going to do, don't do it just because somebody else is doing it. Because just because they're winning in it doesn't mean you are. Everybody has their own niche in what works for them. So the example is just me talking about my business. And my goal, my purpose is to help minority businesses to stop being the underdog. And so what I try to do is provide affordable services for accounting, taxes, business formation, and education so that they can grow strong financial health. And a lot of us believe we have strong financial health if we make 50 grand, if we make 60 grand, if we make 100 grand. I applaud you if you make 100 grand, but that's not strong financial health in this economy. In this economy, we're barely surviving that make 30 or less. Food takes up all of that. So we want to look and see what is going to give us the strong financial health. Preparation. Preparation is important to survive. According to the SBA, 25% of small businesses fail in their first year. So if you've made it to year 2, let me give you a round of applause. If you haven't started yet, understand that 25% of small businesses fail in the first year. So if it doesn't work the way you think it should, it's not just you. Don't allow that to discourage you. Okay? And just based on experience, 18 to 24 months is when the average business becomes profitable. Now, there are some businesses that pull in money quick, but most businesses take 18 to 24 months to be for real profitable. And what does for real profitable mean? It doesn't mean when money hits the register. That's not profit. It means after you've paid all of your expenses, you still have some money left. That is when you are at a profit. So if you're already in business in your notes, write down and kind of figure out mentally, are you in a state of profit? Are you breaking even? Or are you at a loss? And as we go through the training, I want you to take notes to get you to the profit stage. It's recommended that you have the minimum of 6 months of operational expenses to keep the business afloat until it begins to profit. So you want to have rent, utilities, payroll, inventory. There's other things that you could have depending on the type of business that it is, but these are your main things because you don't want to open a storefront and have to close in 2 months because nobody's come through the door yet, but the word of mouth hasn't really spread that you're there yet. So you need time and consistency for people to come in. Utilities. You definitely don't want to be sitting in there with the lights off. Payroll. A lot of people don't hire employees. I'm going to say, depending on the type of business, in some businesses, employees are important. They're an important of you being able to survive because as humans, we can't do everything. We have to be able to pass some stuff out. And inventory. If you're in retail, you're going to need some inventory. Education. So we've already talked about, does the business you're opening require a license or certification? Do you know anything about running a business? Do you know the rules and laws for the business in your area? Some of us don't. Some of us have a skill. I really can crochet good, so I'm going to make bikinis and hats or whatever. But if you don't know anything about business at all, making crochet outfits and stuff is not going to keep you afloat. You have to understand how to find balance. So the first thing you're going to want to know is, do you need a license or a certification? Anything really to do with people, building, all of that requires some kind of certification. You can't just go put a roof on somebody's house. The state wants to know that you know what you're doing so the roof don't cave in. You just have to do that. And in this training, we have different areas reflected, so you will all have different places to look for this information. But take the time, take the class, even if it's just online. Make sure you have the knowledge. Do you know anything about running a business? Do you understand how put the business together, the things you need for the business? There are a lot on SBA.gov. There are a lot of classes that you can take at no charge. Most of the local communities have their, here we call it CEP, but they have different organizations for businesses to become a part of that offer different meetings and the different classes. We never know too much. So find out what's in your area and take advantage of it so that you can grow. Like I said, I got my degree in 91. That's 100 years ago. So I'm committed every year to taking at least 60 CEs because things change. Technology changes. Technique changes. Things continuously change, and I don't want to be left behind. I want to continuously grow. The other reason that I keep taking classes is because if I'm going to teach other people, I need to know. I can't be talking about I'm going to teach you something I don't know. I can't teach you Spanish because I only speak English, but I can walk you through how to keep your books. So, and the other thing, you're going to want to know the rules and laws for your area, because in some areas it may not require a certification and in others it may. So those are the things you're going to want to check. Mindset, of course, the first thing I'm going to tell you is to have faith. Do you have faith? A lot of people don't. And when I say do you have faith, I don't mean are you tapped in with a higher power, for this particular class, that's not my business. But do you believe that you can do this? Do you believe that you have the knowledge, the ability? Do you believe you can fly? Now, I'm a little chunky. I don't do a lot of flying. But when it comes down to it, I believe if I needed to, that I could do whatever I needed to do. Can you feel like a winner even when you look like you're losing? Sometimes business will give you that feeling. You may go a whole week and not see a customer. Can you still feel like a winner? Can you still keep opening the door? Because what may happen is you may go a week without a customer, and then that weekend, have that person that's going to come in and spend 20, 30 grand with you. But can you hold on through the dry patch to win? Are you happy with you? Not the spouse, not the kids, not the dog, but you. Are you happy with you? Because if you're not happy with yourself, you're not going to win in life or business until you find peace with you. And you just have to understand there'll be wins and losses in business, so you need to be mentally prepared. Just because you started a business and somebody told you you were cute doesn't mean you're fixing to hit $1 million that first week. So we have to be mentally prepared that, as Anita Baker used to say, sometimes you win and sometimes you lose. But what do? Do you stop playing the game because you lost? No. You get right back in and you play another hand of spades, or you play another round of Monopoly. You have to do the same thing in business.
You gotta be like Les Brown's son say, I don't quit till I win.
So we're going to look at structure. This is important because there's so many miscommunications about structure. So you guys know, all the information I'm presenting to you tonight either came from SBA.gov or IRS.gov. None of it came from, I just feel like this is how this is, or anything like that, because I wanted to make sure I gave you facts. So a sole proprietorship is a sole proprietorship, the simplest way of starting a business. Less paperwork, less legal filings, and you just keep going. But a sole proprietorship is one person. It's just you. It's no partners, it's no shareholders, it's just you. And for most people, it's the wisest way to start business because you're at the ground level. You're really not making a lot of money to share with anybody else. But an LLC or a partnership, both structured pretty much the same, but you can have either or. A LLC is a limited liability company. This means the members are not personally liable for the company's debts. They're taxed as a pass-through. I'm going to stop right there for a second because I want you guys to understand something. Okay? Because a lot of people are telling you, oh, go be an LLC, go be an LLC. You're going to pay the same tax as you would have as a sole proprietor because the LLC is not taxed. It's passed through. So if there's one, because people are opening sole LLCs, if there's one person in the LLC, when the paperwork flows back around, that one person will get a Schedule K carrying the profit or the loss, whichever one it is. So your taxability is still going to be, for the most part, the same with the pass-through if it's only you. Now, if your LLC has multiple partners or multiple members, because that's what they're technically called, in an LLC there is no CEO or president or any of that. A LLC has members. And the members split up the profit, split up the loss based on their percentage of the partnership or the LLC. So if you have a partner, you may say, well, isn't a partnership always 50-50? Nah. You may have somebody, you carry 90, they carry 10. You carry 80, they carry 20. They carry 80, you carry 20. It all depends on what everybody is bringing to the table. And from an investment standpoint, everybody doesn't necessarily have to bring in money. So I'll use an example, and I'm gonna pick on Jermaine since he was talking. So Jermaine says, I want to be part of an accounting firm, but I don't have the education for it. I say I really want an accounting firm. I have the education, but I don't have money for it. So we become partners, and I'm doing 100% of the work. He brings in the money to software, get the computer, get the building, etc., etc. That's a partnership formed that way, where everybody's not bringing in money, but those who are bringing in money, the others bringing in a skill or time equivalent to the amount of money the other one is bringing in. LLCs work best for businesses that can be sued because you're looking for protection from company debt. So if you make t-shirts, you probably don't need an LLC. Your clients aren't in there while you're making the t-shirts. You're making the t-shirts, putting them online, and selling them. There's really no way for you to hurt anyone in that process. But if you do hair, you would want to have an LLC. And you may say, well, why do you say that? Because if a person comes in for a color and the chemicals take their hair out, or the perm takes their hair out, or strangely the dye gets in their eyes, or anything, or their hair accidentally gets cut when it was supposed to get braided, anything like that, then they're going to turn around and they're going to want to file some kind of suit. Food, you're going to want to be a LLC, because the moment it's not cooked all the way through and somebody gets sick, they're going to want to file a suit. So LLCs are for the protection of those that go into a business where they could possibly end up in court. But here's what they don't tell you. You can still be financially responsible and be part of an LLC. Because what happens is, if you're operating as an LLC or a shareholder of any type, you should not be personally signing off on anything. You may be signing off on behalf of, but the moment you go personally sign off, you have taken personal responsibility. So with the LLC, of course, there's the state fee, the one time, and then you require the annual just to set up, but most require what's called an annual report. And that is when you go in and you pay your renewal fees, and if there's any changes, any additions, any people that need to be taken off, that is when you do all of that with your structure. The next popular structure is a C Corp. A C Corp separates the owners or shareholders totally away from the business. There is no connection. That is probably the safest way to be involved with anything. In the corporation, you set up as many shareholders as you need. There's really no limitation on shareholders in a C Corp. When you go in to do the taxes for the C Corp, it's totally separate from your personal, and every member will get either gaining interest off of anything going on, but the C Corp carries all of the tax. It is not a pass-through. So if you made money, you're going to get a document. Of course, if you worked for them, you're going to get a W-2. But as a whole, if the corporation owes the taxes, the corporation owes the taxes. The company would pay in. Now, if you are a sole person, which you shouldn't be, but if you are, because you should have a board, but if the company doesn't have the money in the bank, the board is going to put the money together and pay it, of course. But it does not fall on you individually where it's going to reflect on your personal credit or anything like that. The corporation stands on its own. And they have to have a board of directors. A lot of you who did the EIDL loan as a company of that type was asked to provide the minutes from the meeting that you had discussing getting the loan and everybody agreeing. That is because corporations are mandated to hold the annual meeting. You don't have to initially just send minutes to the meeting anywhere, but if they ask for it, you need to be able to produce it. And for the most part, you see people who do business formation set up a book for C Corps, and that is why. So they have somewhere to keep all of their shareholder certificates, all of their meeting minutes, and things of that nature. And then you have the S Corp. The S Corp is a pass-through entity. So just like the LLC, everything is going to pass through to the shareholders. With the S Corp, it is limited to only 100 shareholders. It can't be owned by a C Corp or an LLC. But a C Corp can elect to be a S Corp, and then for tax purposes, it will no longer be considered a C Corp. It will still show as one on the state records, but for tax purposes, it will not be considered a C Corp. And you have a lot of people who have LLCs that choose to become an S Corp. And the proper procedure for that is the LLC would stop being an LLC and become a C Corp, and then elect to be a S Corp. So you have people say, oh, go be a S Corp. Well, it's a pass-through. So if it's only you, you're going to still have the taxes. The other thing with the S Corp is, with an S Corp, you have to be on payroll. That is its mandate. You have to be on payroll. So you may say, well, I don't want to be on payroll. I don't want to pay myself. Then you don't want to be an S Corp, because with the S Corp, the expectation is that you will have payroll. With any of these businesses except the sole proprietorship, if you do something that requires workman's comp, the one of the partners or shareholders is able to be exempt from workman's comp. Depending on the state you're in, you would go through the state process of getting that person exempted. But the person would be able to be exempt from workman's comp. Okay, now
I got a question about that.
perfect, because the time you can ask it.
Okay. Now, if they get to nominate one person that's gonna be exempt from the workman's comp, right? how do you select that person? Is it a selection between the partners of the LLC?
Yeah, if you're a LLC, you and the partners are going to sit down and figure out who's going to be exempt. Normally, the person who goes out and does the physical work should be the person that's
Mhm.
exempt.
Okay.
Um, if you're in a corporation, of course, the board of directors sit down and meet and come to these conclusions and put them in the notes. But certain businesses, this isn't going to impact: construction, lawn care, things like that,
Okay.
where um, workman's comp is something that is required.
Mhm.
Having the one of the shareholders or members exempt helps you save money in that area.
Okay.
So this is where we stop for a second and talk a little bit about what we just discussed. Are there any questions about structure?
I have a
I got I got a few, but mine gonna be
Okay.
on restructuring.
Okay, hold on. Nanique has her hand up. Okay. So we're going to let Nanique ask, and then you can circle back around and ask me, Jermaine. Yes, Nanique?
Thank you. My question is for as a tax preparer, um, when do you when do you recommend making the transition, or if it would be needed, from a sole proprietorship to an actual LLC with the expectation to eventually expand?
It really depends on where you are from a financial standpoint, if you have partners or you don't. Because now there's some things that you're going to be responsible for anyway, even if you move to a LLC as the EFIN holder and the owner of the company. You're going to always be the one who holds the responsibility. Because it's a fiduciary type company, we're dealing with people's background, personal information, financial information, and things like that. We always hold a sense of responsibility. So you're just going to for you, it's going to determine: do you have people that want to be partners with you? Are you ready to take on the next level? Or do you just have employees? There's going to be a lot of things that you would reckon with yourself before deciding to move up. The one thing you should have, no matter what your structure is errors and omissions insurance and general liability insurance. You do not have to be a large structure to have it. You can have it as a sole proprietorship.
Okay, thank you.
You're welcome. Tamra.
Hi. So, Precious, I wanted to ask, sort of like the first question was, is there a set dollar amount where you want to transition from the LLC to the S Corp? Because a lot of times people talk or say there are greater benefits when you for taxation when you go to the S Corp. But is there a dollar amount when you should really transition to the S Corp?
I wouldn't say a dollar amount. I would say when you finally have partners or shareholders, a board, and I'm going to tell you why. Because it's a pass through, no matter how much money you're making, if you are the only one on the S Corp, you are the only one to carry the tax liability. So with the S Corp, we know the S Corp, you do the 1120S, and then you have the Schedule K1s that go to each shareholder, reflecting either the loss or the profit of the business, which then would go on that person's personal taxes. If it's only you, and say for instance, the S Corp brought in $100,000, and maybe their profit, will say, was 70 of that. That 70 is going to go on that K1. That K1 is going to come to you, and you're going to have the tax liability of that S Corp. Um, what I look at as a fix based on income is, if I have partners and someone else is going to have to pitch in on it, the C Corp is going to give me the better flexibility in avoiding carrying the personal tax of it. You kind of understand what I mean by that?
I do. And for the S Corp, it is better to have more than one person so the tax liability doesn't fall on you. But then my next question is, with the structure of the S Corp, if I'm not mistaken, isn't it not technically like the C Corp, but don't they still have to do the memberships and things like that, like the C Corp?
Yes, they still have to have a board of directors. They still have to have their mandatory annual meetings. Um, they are limited to 100, where the C Corp is not. But yeah, for the most part it is. But you see people going into it as an individual, and there's really no benefit. You're setting yourself up still for double taxation, because now you're required to be on payroll. So here's what happens. You start the S Corp, you're the shareholder. You start the payroll. Now they're taking out the payroll taxes. Boom, you have a W-2. So maybe you'll get a credit on the payroll taxes you paid in, but it's only you. So the K-1 for the company is coming to you too. Boom, now you're here for the profit. The profit is going to not have anything already taken out of it other than the expenses, so you're going to carry the tax liability for the profit portion.
Okay, thank you.
You're very welcome. Were there any other questions on this section before we move to the next?
Mr. Jackson?
No, goodness, yes, Mr. Jackson, I'm sorry.
Okay. Sole proprietorship, meaning one person. I create some doing business as, and I put multiple people on them. I caused a real banking conundrum. Took like 4 hours to figure out what I was. Come to find out we're not a sole proprietorship because there were multiple people on it. Because the way I filed it, we created our own, like I guess they classified it as a private company. I did it for multiple entities, and when I formed one of those entities, I made it be owned by another entity as a part of it. So what I did was, through Nice and the Nerd, then I formed these two radio stations. I did a Sun on one station. I did a Sun in another station. I turned around. I did a funding company, and I did it as a sole proprietor with just me on that itself. I formed and created an LLC, and I made the LLC become the owner of the Three Mics and the Nerd situation. So now when all is boiled down, when it comes to tax planning or whatnot, I done created a little mess, and I'm gonna need you to help me structure and fix it.
Okay. So
right.
The first thing that I'm going to tell you is, if you're going to create an umbrella that you're going to then run other businesses under, it should be a C Corp.
Yes, ma'am. So now my question is this: how do we turn this LLC that was newly formed at the beginning of the year into that C Corp, and then drop all the other holdings that it has and pull the others up under in one swing?
Okay, well, you would definitely have to go through reaching out to the Division of Corporations for the state of Florida, having them switch the entity, which is going to cost, and then where the other companies are doing business as, when you set up the doing business as, you should have said who owned it, and so now you already have it showing owned by somebody else.
No, I have it shown on the list. I have it show on, like, when I redid the paperwork, when I formed the LLC, the Three Mics and the Nerd LLC, I made it become the owner of the Three Mics and the Nerd production. Like, I got to show this stuff just for you to really understand, because I can't properly explain it. But we got a gang of brands with multiple owners. Some of them owned by one entity, and Some of the people on this, it's just, I got a real mess, and I need to fix it. And what I'm looking to structure is this: supervision media group. Inside of that media group, I would like to have the LLC, which is the distribution label. I would like to have the doing business as 3 Mics and Nerve. That one, that's actually the production. That's the production of it. I would like to turn around then and put both of those radio stations inside of that, leaving all of that entertainment, everything dealing with the money side of things, the credit repair, the tax company, and the funding, and so forth. I would like to have all of that umbrella under one situation, and I would like to create a trust fund so that I can take my minor children off of these companies, and they're represented by a trust fund. Can we set all? Is that doable? What I'm attempting to do?
It's doable.
Okay. Well, that was my question. I just want to make sure it's doable, because they said when I set stuff up, I set it up like I was a mobster trying to run from the government. So
Yeah,
that's not
what I was
what
thinking.
She listen, and that's not me. But I would like to get it the right way so that it reflects properly, and it helps us grow business credit. And also, I would like to get the company registered as a minority-owned company. The actual, the umbrella, the parent company.
Okay. That's going to be a whole nother training. I am going to do a training on that because I told a few people after I got mine done that asked me that I would walk them through the process. I will let everybody know on the call. That's not an overnight process. It took a while because they ask you a lot of stuff. You have to verify a lot of stuff, and then they take their time. But it can be done. And the benefit to that is bidding on government contracts.
Exactly.
So that will be a whole different call. I'm not going to go into that tonight, just for the sake and respect of people's time. But in response to you saying that you have all these people involved, I'm going to say this. I don't want anybody to be offended. You don't just go put, if people can't invest, do work, do any of that, don't just go adding people to your business because you feel like you want it to look good on paper. Because when it all boils down to it and you go to do your return, you have to list what their percentage is. And these people who may not even really want to be involved like that will now have a tax liability in a lot of cases. So are there any other questions on this particular portion, or is it safe for me to move forward?
You answered all mine.
I just don't want to miss anybody else's, and I can't see everybody's hands. So if you have a question, unmute and go ahead and ask me. If not, I'm going to go ahead and move to the next session. Okay. I'm going to move forward. I'm sorry. I got people asking me questions in my text.
I'm so sorry. I was trying to find the unmute button. Oh, I just have one question. LLC's annual filing fee here in the state of California is $800. Yes, which is very expensive. And so I know that you had mentioned that there are some states that don't have any annual fees. I know that there's like a lot of hype behind the whole filing in Delaware. I still specifically don't understand what the actual hype is, because I know that they have an annual requirement as well. I don't know if it's more cost efficient, but I know that I have colleagues that incorporate in neighboring states such as like Arizona, Nevada, because they're a lot inexpensive, and they don't even have state taxes at all. But my question was, were there any states that you could recommend as far that have lower annual or operating costs? California is way too expensive.
I will be honest and tell you that is outside of my realm of support. Okay, I don't really, when I'm dealing with businesses, I deal with them on a very transparent level, and I don't really advise them to go outside of the state that they're operating in unless it's something that they're operating like they live here, but they're handling this service and advertising this service in the state in question. Only because I don't, from a personal standpoint, I like to keep it simple. So that question is outside of my realm of support. I'm really not sure what other state. Now, I am very aware that Texas, California, a few states are so high till it's almost safer to be a sole proprietor forever. But I'm not really sure which other state would be better.
Okay, thank you.
You're welcome.
I have a question.
Okay.
So if you formulate, say for instance, you formulate your business in Florida, but you move to a different state, would you have to register the business with that state as well?
Yes. You want to register the business with that state. You don't necessarily have to close the business in Florida,
Mm-hmm.
but you want to open the business in the state that you're in. You want to make sure that there is nothing that lead you where you leave the door open for them to come stop you from operating wherever you are.
Okay. Okay. Thank you.
You're welcome. Okay, so now let's talk a little about hiring help. A strong business in most cases consists of a strong team. One person can't do everything forever. You may be able to start and pull off up to the first, we'll say 5-6 years, with it just being you. But at some point, you're going to need some help. So whether you outsource or hire, most businesses are going to need an accountant or a bookkeeper. You're going to need somebody to do marketing, and you're going to need someone who either schedules appointments for you or responds to messages and emails. The reason I say that is because an accountant or bookkeeper is going to keep you financially balanced. Somebody doing marketing is going to keep you in the face of the people, which keeps the money coming in. And a scheduler makes sure you don't miss none of the money trying to come to you because you were too busy to see someone sent you a text message, an email, Facebook message, or whatever. And someone that responds to emails, because some of the emails that come as just random questions will turn into a client if you respond to them. So having those positions filled leaves the owner free to do whatever it is the owner does. So say, for instance, you're a baker. Well, you're dealing with food and flour, and you don't want to have your phone or any of that right there up under you beeping and carrying on. But if you have someone that's responding to your messages, you can focus on your baking and the artistry of your fondant and everything like that. If you are in landscaping or lawn care, you're not going to hear your phone because you're on your lawnmower, your tractor, your whatever, which are all noisy. And for your safety or the safety of others, you're not going to want to be distracted by phone calls. So when you first start out, you may start out and you may just have an answering service. And a scheduler, because schedulers are real popular now. Schedulicity, StyleSeat, there's lots of them where people can go on and see your calendar and schedule and move forward, and that's fine. But at some point, you're going to want to have balance. So you're going to want, if nothing else, if you don't have anything else, you're going to want these three positions, or maybe one other person other than you that does all three of these things to help you to grow your business and your business to win. So you can hire help that you pay hourly and withhold tax. In this case, you have more control, because if you hire an employee, you set their schedule. You tell them how you want it done, and you provide the means for them to do it. So it's totally your ball game. If you contract an independent contractor, that you will pay, not hold no taxes, not hold anything. You have to remember that you also hold no true control. You have the ability to tell them what you want, but you can't tell them specifically how to do it. You can't set a schedule for when they come to work. And a lot of us do, because we really don't realize the moment we start taking that kind of control, they no longer work for themselves, they work for us, and we got to pay them regular payroll. So employees work for us, we have the control. Independent contractors work for their self, they have their own control. Or you may outsource, Fiverr, Upwork, your local directories in your area to find companies that offer the services you need. It's kind of easy to find companies to do it. They're going to do it the way it's supposed to be done, or you're not going to pay them anyway. They're going to work on their own schedule, but the only real goal is to make sure that they did what you needed done. But you're going to want to consider that. Here's what the IRS says about employees versus contractors. The general rule is that an individual is an independent contractor if the payer has the right to control or direct only the result of the work and not what will be done or how it will be done. So that's that. If you're an independent contractor, you're self-employed. The earnings of a person who is working as an independent contractor is subject to self-employment tax. And so for those of you who don't know, what makes up the self-employment tax is the Social Security and Medicare. These two together is what the self-employment tax is used to pay off. When I send you guys the PowerPoint, you'll be able to click this to get more information on the Self-Employment Tax Center. You are not an independent contractor if you perform services that you can be controlled by an employer, what will be done and how it will be done. This applies even if you are given freedom of action. What matters is that the employer has the legal right to control the details of how the services are performed. If the employer controls, you're an employee. If you have employees, you put them on payroll, you take out the tax, and you follow the payroll system. Anything other than that, you're out of alignment. And a lot of us do things other than that, but it's technically out of alignment. If an employer-employee relationship exists, regardless of what the relationship is called, then you are not an independent contractor and your earnings are generally not subject to self-employment tax. However, your earnings as an employee may be subject to FICA, Social Security tax and Medicare, and income tax withholding. So I wanted to make sure to show you guys what the IRS had to say about it, because this is where, for my clients, I see the biggest issue. They don't want to have to pay the payroll tax, so all of their employees are independent contractors. In the meantime, they're not really independent contractors, they're employees, because they're being told where to go, when to go, how to go, time, and they're locked into the control of the employer. And so I just wanted to make sure that I covered so everybody was aware how this actually works. Any questions about independent contractors versus employees, W-2s versus 1099s, or anything like that before I move forward?
Am I going to issue myself a W-2? Because from what you just described, I got to issue myself a W-2 and a 1099.
I'm not sure why you would do both.
Different entities.
Oh, yeah, the different entities. Are you paying yourself on payroll, or are you doing like other owners and just existing off of the profit?
You already know I made the mess. You already know I ain't do the payroll. You know I didn't. Remember? I've been trying to set it up for this new situation, and you see what I'm using through today on that. So,
Okay.
no, I ain't quite done it that way.
Okay. You have a little tornado going on over there. We'll deal with your
You
tornado
already know
outside of the
I
training.
so actually, check this out, y'all. My apologies. I ain't gonna ask you no more questions in class. Me and you just got to get together. I won't ask you no more questions in class. I got to ask later. Because
Okay.
ain't none of my questions gonna be hypothetical.
Okay. Did anybody else have a question in this area?
Yeah, I do. I have a question.
Mm-hmm.
I used to just do, pay myself out of the business, and then I read and I'm hearing that I should be paying myself with a W-2. So I guess the only reason is for taxes to be taken out. So
What is
how
your
do I
business
gauge which? Well, we have the painting and pressure washing. Well, it's the LLC,
Okay,
and
so
I
you're
have
supposed to be on payroll.
So I'm not doing payroll. So I'm trying to start out doing the right thing since it's the beginning of the year.
Okay, with the LLC, normally the owners are not on payroll. They are pulling out of. They may set up their self an owner's draw, which is the equivalency of a paycheck, but just called something else. And normally with the owner's draw, they're not pulling taxes out of it. What you're doing normally as a business owner, which we're getting ready to go into next, is paying your estimated taxes quarterly to avoid tax liability. If you just want to set up something where you have like a 401k, you would do a SEP and set up your self-employed 401k, but you wouldn't be on the on payroll.
Okay, so paying in quarterly would be the best way.
You're going to want to pay in
Okay.
quarterly. And just understand that because you're going to put yourself kind of still in a double taxation situation with the payroll tax coming out, and you're going to still be taxed on the profit. We're going to say the profit because we're not looking for a loss. So you want to be careful in that area.
Okay. I think I just do the quarterly. Don't make it complicated. Every year I say I'm going to do it, but this year I'm going to get it set up so I can start doing that.
Okay. And are there any other questions on this particular section? Okay, then I'm going to go to the next section, which will probably help you, Sent. Okay, it's the section after this, but I'm going to go into it. We're going to talk a little bit about payroll. Now, for payroll, I recommend QuickBooks because it has a time clock, and the time clock has GPS ability in it. And so for those of you who have employees that travel to different locations and do things on site, they're able to clock in the app on their phone, but the GPS will notify you of where they were at the clock-in time. So if they were supposed to be at a job site cutting grass or at someone's home giving health care or whatever, you'll know that when they clocked in, they were in the right place based on the GPS. My second choice is Gusto. Gusto is really good with payroll also. It just doesn't have a time clock in it, but if you use QuickBooks, you can link your Gusto to your QuickBooks and still use the time clock in the QuickBooks. QuickBooks works really well with paying contractors because contractors can be paid direct deposit just like employees through your QuickBooks. You can go in and send them a link where they can fill in their W-9 securely, without having to give you their ID or anything. They would just upload all of the information into the QuickBooks Workforce. And, of course, you would go in, and as they do whatever, you would track their time or create their bill. And when you go to contractors and click Pay Contractors, it will send them, pull it from their bill and automatically send them to them, kind of like like as if it were a time clock. So let's talk about taxes. If you have a retail business, most states require you to pay sales tax. Depending on how the business structure is, it could be monthly, quarterly, biannually, or annually. And it's not necessarily the structure, but by how much money the business actually makes. So a retail business would be anytime you're selling stuff, clothes, hair products, makeup, cakes. These are things that you should be charging sales tax on and paying sales tax to the state. Because if you've set it up correctly, you have a sales tax certificate which gives you the ability to be exempt of paying sales tax when you buy the items for your business. For truckers, I don't know if we have any truckers on or people with truckers as clients, but truckers that drive nationally have IFTAs taxes that they do, the International Fuel Tax Agreement. It is filed quarterly. What the IFTA is an agreement between the 48 contiguous states and 10 Canadian provinces, so that it makes it easier for them to operate through. But what happens is you would file the fuel usage, and then they would determine the tax. For all businesses, estimated quarterly taxes as per the IRS, taxes must be paid as you earn or receive income during the year, either through withholding, which happens on jobs, or estimated tax payments, which happens with businesses. If the amount of income tax withheld from your salary or pension is not enough, or you receive income such as dividends, alimony, interest, self-employment, capital gains, prizes, and awards, you may have to make estimated tax payments. So you can work and still have estimated tax payments. Now, what I recommend if you have a job that's not taking out enough taxes is that you update your W-4 so they take out the right amount of taxes. But if that is not what you want to do, or it's bonuses or extra money they're not going to take taxes out of, keep in mind that you don't have to only be self-employed to pay estimated quarterly taxes. You can work and still have to pay estimated quarterly taxes. If you are in business for yourself, you generally need to make estimated tax payments. Estimated tax is used to pay not only income tax, but other taxes such as self-employment tax and alternative minimum tax. So, see that this is highlighted because this is important. If you don't pay enough tax through withholding and estimated tax payments, you may be charged a penalty, and they may still hit you with the penalty even if you have a refund due. So you say, well, I don't have to pay if I have a refund, but your refund is going to be lower than it would have been because you have the penalty. So I know a lot of businesses that don't pay estimated quarterly taxes. They ride it out and they do whatever their liability is at the end of the year. And for them, so far, that has worked for them. But what happens is if you go in and you pay your quarterly, at the end of the year, if something has happened that has caused you to be in a place where you have overpaid, then you will get that back in a refund. If you are in a place where you have underpaid, of course, then you'll still owe a few dollars. But if you have children that you claim earned income credit for, child tax credit for, anything of that nature. And if you want to get the full credit without penalty going against it or extra taxes coming out of it, you're going to want to go ahead and begin to pay quarterly like you should. So we're going to go up here. And how do I pay estimated tax quarterly? This link takes you directly to it. So when I send it to you, you guys will be able to access it. But for those of you who applied for an EIN over the past, I'll say at least 5 years, you have a few weeks after received a mail out from something called ETPS or ETPQS, something of that nature. In that, if you did not throw it away, is your passcode and your information to be able to go on to this site and pay your quarterly taxes. So if you're not in business yet and you're going into business, once you get your EIN, look for that mail out because they'll send it and you'll have the ability to get in and do it. If you don't know where it is and you're already in business and you need to pay it, never fear, click the link and it's going to take you directly there so that you can enroll, set yourself up, and then pay your quarterly taxes. It's all the rage to talk about employing children, and employing children is great. We want to teach them young, but the children, in order to legally employ children, they have to be at a working age, 13, 14, somewhere where they can work. They can't be 5, okay? They can't be 3. They have to be at a working age, okay? If the business is a parent's sole proprietorship, which means the parent owns it, or a partnership with the parents, the mama and the daddy own the business, then payments for the services of a child are subject to income tax withholding regardless of age. Payments for the services of a child under 18 are not subject to Social Security and Medicare taxes. So I know we hear about all the tax breaks that come with hiring children, but I made sure to put the link in here if there were any questions so that you understand the facts according to the IRS. If it's owned by the parents, they're still subject to that federal income tax withholding. If they're under 18, though, they won't have Social Security and Medicare taxes taken out. So they'll have their federal taxes taken out. They won't have Social Security and Medicare taken out. If they are older than 18, then they are subject to Social Security and Medicare taxes. So they would have all the taxes coming out, because they're an adult. Payments for services of a child under 21 are not subject to FUTA tax, the federal unemployment tax. If the child is over 21, then they are subject to FUTA tax. So I agree, hiring children are great. It's amazing. You can write off their wages. You're teaching them responsibility. You're teaching them a skill. But let's be 100% clear of the position we're putting them in. Because if they are making money and we are taking out federal tax, we have put them in a place where they have to now file a tax return. So For children that still live at home and their parents provide the majority of their support, they would file the return. They would mark on the return that they're still being claimed as a dependent. They'd get credit or owe based on whatever they made, and the parent would still be able to claim them as a dependent for other dependent credit or earned income credit. But if they've made over, I want to say it's $4,300, they cannot. They have to file. If the business is a corporation, a partnership, unless each partner is the parent, or an estate, even if it is the estate of the parents died. Payments for services of a child are subject to all of the taxes. So if your child gets a job for someone other than you, McDonald's, Burger King, whatever, they're subject to all the normal taxes. Now, what if you work for your child? Because some of us may. We may not today, but the goal is our children are our future. We want to teach them how to get into business and their business grow, and maybe we want them to pay us. Who knows? I might like getting a check from one of my grandkids. But if the business is a child sole proprietorship, so just your child owns the business, no partners, no, you're not a partner, any of that, then payments for services of a parent are subject to income tax, Social Security, Medicare. Payments for services are not by a parent are not subject to FUTA. If the business is a corporation, even if controlled by the child, or a partnership, even if the child is a partner, or an estate, the payments for the services of a parent are subject to federal withholding, Social Security, Medicare, and FUTA. If the parent is performing services for the child, not for the child's trade or business, payments for services of a parent are not subject to Social Security and Medicare taxes unless the services are for domestic services, and each of the following apply. You employ your parents, you have a child or stepchild living in the home, you are a widow, widower, divorced, living with a spouse who because of a mental condition can't care for the children or stepchildren for at least 4 weeks. The child or stepchild is either under 18 or requires the personal care of an adult for at least 4 weeks due to a mental or physical condition. So, a parent that is performing services for their child but not their child's business, maybe we'll say a child with some form of mental disability or physical disability, and they are paid, this is what's going on with their taxes. Okay, so are there any questions about that portion? There's a lot of silence going on right now. That's the part I thought the questions would be about. No questions? Okay. Then the importance of business taxes is filing puts you in a position that helps you get loans, grants, and it gives you a sign of legitimacy. When you say you have a business and you're trying to get money, the first thing people ask you for is your tax returns for the past 2 years. Regardless of what the loan is, or the grant is. They want the tax returns for the last 2 years, and they want you to sign off that they can pull the transcript of it to prove it was really filed. Because that is the most legitimate way to verify the money you say you make versus the expenses that you have. Because legitimately your business may bring in, we'll say, 150 grand. Your business may legitimately bring in 150 grand, but what are your expenses? If your expenses are 120, then one, we need to look at the budget and kind of work some things out. Two, your only profit was 30 grand. So you don't really make 150 grand, you really make 30, if that makes sense. So I want to ensure that the business owners understand the type of taxes that they will have, they should be filing, and understand the importance of it. Is there a question?
Yeah.
Okay.
It's quick. It's about the topic that you're on right now. I'm kind of confused about that for loan purposes and stuff in the future. So expenses, I understand what expenses are, but so do they get into details and look at, let's say, we're not talking about overhead or operational costs, let's say investments that did bring your profit margin, that change your profit margin, your gross and your net. Do they look into that, or does they look at it as losses? Because if I made $150K and I spent 80 on investments, or maybe a rental property, or maybe some land, or maybe a bigger piece of equipment, how do they look at that?
Those would be considered assets.
Okay.
So the things that you invested in and bought are figured into your net worth. So say, for instance, oh goodness, and you have a bunch of stuff. Okay, so say, for instance, you have the 2.0 turns, the tractor, and we'll say you went and bought 2 more cargos to turn into cargo houses, right?
Mm-hmm.
On your balance sheet, these things are going to show as things that you own, your assets. So the value of these cargo trailers, now they're going to change because you're going to renovate them. But initially, what you paid for them is going to be the current value of them before any changes are made. And the other things, the value is going to show. So when they're looking at the paper, because in essence, you're going to give them the 2 years of taxes. Normally, they're going to ask for your profit and loss statement and your balance sheet. And when they're looking at the full picture, they see this is what you went through operating. Here's your profit and loss. Here's your expenses. And here's what you own. Here's where your actual worth comes from. And that's why it's easier for someone who owns property to get a loan than someone who does not. Because now they have something that of value that if you skip payments, they can step in and not lose money, because they could just take the property and now use it for something to bring in more money. Kind of makes sense?
Yes, completely.
So you, and I can say this for you personally because this did your stuff. You're, from an asset standpoint, you're in a good place. You're in a good place because if you decided tomorrow you didn't want to do your business anymore, you wanted to sell the business, you have everything for someone to do a turnkey. They could hand you the money and be in business the next day, because now they have all of the tools and everything to just get going. They don't have to go look for anything else, if that makes sense.
Yes.
So yeah, that's how they would look at that. Investment items are not looked at as a loss unless for some reason you've lost it or anything like that. As long as you have it and it has value and it works, then you're in a good place with that. Any other questions? And so for the sole proprietor, of course, the sole proprietor is putting their business on their personal taxes on a Schedule C. The LLC, if it is a sole member, then they're disregarded and they would go on a Schedule C. If they are multiple people involved, then they're going to go on a 1065, and the 1065 will generate Schedule K1s that will then go to the partners or the members, and they would put the K1s with their personal taxes. Now, it's a lot of you on here who do taxes, so you already know this, but for those on here who are business owners and don't do any taxes, I will let you know that when you put the K1 on, you cannot add business expenses there. The business expenses have already been deducted on the 1065. So with the K1, that is strictly income for you. And if you have not made any attempt to try to do anything from a taxable standpoint, you're going to have self-employment taxes on that income. Because the LLC is a pass-through, and so the LLC doesn't pay the taxes, the members do. Okay? So then you have the C Corp. If you have a C Corp, you're getting an 1120 done. The business carries all of the taxes. It is not a pass-through. So you technically can do your personal taxes before, after, in the middle. With the 1065 and the 1120S, they need to be done first before the personal taxes, because the K1s are going to need to be added to your personal taxes. The other thing is corporate taxes their final deadline is March 15th instead of April 15th. And the reason they're expected to be done and their deadline is earlier is because those K1s are needed for the personal taxes to be able to be done. Now, if you have a trust in some cases will also have a K1. So as you're setting up your business, whether you do taxes or you don't, you still need to understand the process so that you can have healthy financial growth. With the S Corp, of course, we know it's limited to 100 people. They file an 1120S and they are passed through. So 1065 and 1120S are passed through with K1s. Schedule corporation, not a pass-through. Any questions there? And just because I was hard on Jermaine, who has the ability to call me all day, doesn't mean I don't want questions. I want you guys to ask whatever you may be unsure of, because the purpose of this was to help you guys grow.
So do I get to ask a question?
Ask a question.
So this LLC that I formed right now, I think I caused a problem because one of my partners, he had got a W-2, and he was just talking about filing his taxes. He was attempting to get me to file them for him, but I never sent him what you just said. I haven't sent him that paper because I haven't done our taxes.
Well, you might need to do your taxes when you get off of the training and give
So,
him
but my question is no. This is my question. Is he gonna have to do an amendment now to his taxes because of what I just did?
Yeah. If you've already done the taxes, yeah, he's going to have to amend and add the K1. And that can very possibly
This
change
man got
your
a this
mindset.
man got a medallion. This man got a 9 medallion in the banking world. I just caused a real problem. I got to get off class. I'm gonna call y'all back.
All
I'm
right.
gonna talk to y'all. I got to go.
Okay. I want to say Tamiko had unmuted.
Yeah, I did. I have a question.
Uh-huh.
Okay, so the quarterly taxes is like every 3 or 4 months, correct?
Mhm.
And it's a certain amount that you pay based on what you're making for those 3 or 4 months.
Mhm.
Okay, so us as tax preparers, like I just work during tax season. So do I make that one payment based on what I made at the end?
Mhm. Yeah.
Okay.
In our situation, a lot of us, I work year round because I keep books and do business formation and drive people insane when I have the opportunity. But so I have to do quarterly. But for most tax preparers or tax offices, they run from January to April just in time to file the quarterly tax, and that's it for them, for the year.
Okay. Well, I'm trying to step into more things this year, but as of now, it's just the taxes.
Well, what I'm going to say is if it brings in enough money to hold you through the year, girl, you're doing some things, okay?
I mean, it does. I mean, I just do it. I mean, I love doing it, but my husband works, so I'm just doing my passion.
Okay, I understand.
Yeah.
Totally understand. Any other
What's
questions?
the percentage on it? Like you have to pay like
It
say for example
now
you made 89,000 within the tax season.
because it does vary based on how much you made. Of course, the percentage changes based on what you made. So hold on. Uh, tax rate. You said 89.
Yes.
Okay. And now I need to see the tax rate. Okay. 89 yearly. You would take 75 of it would be taxable. Whew. Okay. 11 11,000 and some change looks about where we are with the 89,000. But I'm getting ready to drop a link in the chat that gives the calculator.
That might be right because um when I did put my numbers in, yeah, off top before I put in what my contractors what I paid out for my contractors, when I just put in how much I made, it instantly said I owe 12K.
Okay, so yeah,
Yeah.
that's
I just closed it and it took me a little nap.
no, trust
So
me.
okay, so if you don't pay the whole thing, they'll penalize you,
Yeah, you'll still owe it when you file taxes at the end of the year.
even though you didn't pay them some kind of money.
Yeah, we're talking about the
Mm.
IRS here.
I
You
know.
might as well,
Oh well. Okay.
you know. Now the good thing is that you do pay people, so you do have that deduction, and you have to
Yeah.
pay for software, any bank fees that you have. All of those different things are expenses.
Right.
So at least you have a little wiggle room in there.
Okay. Thank you.
You're very welcome. Any questions? Everybody understands how to pay people, when to take taxes, when to pay taxes. Everything is crystal clear. Because I did run out of time today doing people's taxes to make the workbook. I really wanted to make a workbook for this so you guys would have something to take notes in and just kind of glance over. But I ran out of time, and I didn't want to overload or overextend. I wanted to kind of start with the basics and kind of give you guys the things you need. Do you guys feel like this was helpful for you?
Yes, it was very helpful.
Yes, it was for me too.
Yes,
Okay.
it was very helpful, very informative.
Okay.
God knows you just
Thank
saved me a 30-year relationship. Thank you.
Okay. Because one thing required, and it doesn't really help the community if I take the classes and learn the stuff and then never reach back to help any of the businesses in the community. So I can't sit back on my pedestal and say, our black businesses are so rah, 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 when I do nothing to try to help. So I kind of impromptu said, let me throw together and host this class, and if nothing else, answer at least one question. Now, I will be doing more classes. I'm not 100% sure. Structure is what I hear all the time, so I knew to cover structure. But I'm not 100% sure what else people need to or want to know. So if you guys send me, I think most of you guys are friends of mine on Facebook or know my direct number, shoot me a text or send me a direct message and tell me what you would want to hear more on or understand more on. Um, and what I'd like to do is try to put together something like this, maybe monthly. I'm not going to lie and say every week, but maybe monthly, where we can openly talk and grow, because we need it. We really need it. We need to, okay, trust, definitely we can do trust. And the hiring process. The hiring process kind of varies depending on the type of business, because some won't take felons and some are open to felons. And I'm glad you said that, because this is what I want to touch on for those who already have employees and are already paying payroll. If you hire from welfare to work, seniors, veterans, and felons, you're eligible for taxes. So hiring, because you have to register them within like 3 weeks. But as you're hiring going forward in the future, these are things that you're going to want to get the information on, and you're going to want to register that you have them so that you can save money on your payroll taxes. Um, I just want to put that out there, because if they're going to give a credit for it, it's going to save you a few dollars, you might want to consider registering with the reentry programs so that they can have you on the list of people that hire people who have just gotten out of jail. And you're probably thinking, why would I want to do that? Because they deserve a second chance. None of us are perfect, and they deserve a second chance. You may also want to, if you're hiring, register with the unemployment department in your state. How we have Employ Florida, I'm quite sure all the other states have something. And hire from welfare to work people. A lot of people get into situations, they have kids, whatever, they end up on welfare. You get a credit if you give them employment and help them move off of the system into real life. So you may want to consider that. You know what I mean? I'm not saying don't hire people that's never been a felon or that's never been on welfare. Hire them too. But you may want to, if your business allows it, you may want to consider it. Now, those of you with tax offices, I'm not We can't get someone that was a felon a PTIN until they go have been out for a few years, and it can't be anything financially related. It can't be um, anything like money laundering or anything like that. But sometimes just being open to hire someone, you may help someone change their life. Um, so those things we want to talk about. Um, so I'll definitely put something together with all of the information needed and do that. I'll do that one next month, Anthron. Um, the other thing I want to encourage is one of the reasons that the other communities excel is because whether they like each other or not, they'll work together. You can take two people that can't stand each other, and if the money is right, they're going to work together like they're best friends to get to that money. In our community, we're so busy proving who's the hardest and who's the toughest till we won't work with people who, if we work together, could actually be a benefit. And in essence, we hurt ourselves. So I'm not perfect. I'm definitely not perfect. But before I present you anything, I'll research so that I'm not lying. Okay? And if I later find that I gave you something that has changed, I'll let you know that. Um, yes. Yes. QuickBooks will. You can go into your QuickBooks account and go into apps and link your Square, and it'll pull in. If you guys have a few seconds, I can screen share and show you what that looks like. But I need you to go loud and tell me if you have time for that.
Okay, I have time.
Okay.
Run it.
Okay. So I'm going to.
Yes, I have time.
Okay. Then I'm gonna do a quick walkthrough of QuickBooks for those who use it or plan to use it. Let me come over here and open it real quick. Sometime Friday, and I'll send you over the forms that you need to do for your state. I hope that wasn't okay, because I needed her to hear what I just said. Okay, so I'm gonna share.
No, I'm still here.
Okay, you heard me?
I heard you say you'll send me the form.
Yep, I'll send it to you.
Okay.
Give me till
Thank
like
you.
Friday though, so I can pull it.
Okay.
All right.
Thank you.
Mhm. Okay. Can you guys see my screen?
Yes.
So for this
Yes.
demonstration, I'm gonna go ahead and go into my own. So if I go into, you see when I click banking, for banking it gives me banking, app, rules, receipts. So if I hit app, I can connect my Square here. I can connect my Amazon business here if I used it. And I can connect my eBay here if I used it. I don't use any of those. But you can go right in and connect your Square. And if you need other apps, you can look down here and see what other apps that they have available. There's quite a few. QuickBooks Time, lien law for those of you who deal with law offices, legal clients. All of these different apps will sync with your QuickBooks. Now, I'm going to hop over to a client that uses Square and kind of show you what it looks like when it comes in. Okay, I want to go straight to app transactions so I'm not showing anybody's business. Okay, and so you see that it pulls in everything from the Square. Now, of course, this is all from a few weeks. I need to go in and update it, but it pulls everything in. And then the same way you would categorize your bank transactions, you would categorize your Square transactions. Did that make sense, Mr. Oates? I don't want to meeting. Gallery. Did I lose Mr. Oates? Or Mr. Oates just isn't answering?
No, he said yes in the chat.
Oh, okay. Look, because I can't see both. Okay.
Would this be a good time for me to be added?
I'm not going to add you while I'm in training. Okay. but I will. Did you send me another? Yeah, you sent me another email address. I'll go in and take out the old one. But I'm going to pull up a sample company real quick.
I need a week training on QuickBooks, like for real.
You guys just said that. Who just said they needed training?
Tamiko.
Okay.
My sound is going in and out if you can't hear me, because right now I can't hear you.
Okay.
It's my house. It's mine. I can hear you now.
What it was, I heard you. I just didn't know who was talking.
Oh, yeah. I need like a week on QuickBooks. I just can't get it together.
Okay. Will.
It can be after tax season because I have already set up like a payroll company already and got it going already.
Okay.
So it can be next tax season.
Okay. Then if you have we can do it after tax season. That'll be perfect. If not, I was gonna ask Will if he had time because he's certified also, but I don't think he heard me because he didn't answer. Okay, so
I heard you. Everybody else was talking.
Okay, so this is a sample company so that I'm not giving up people's personal business, and this is pretty much what they see as soon as they pull up to kind of show them where they are. See, it tells you if you have invoices, if you have bills, different things. But when you go in and set it up, of course, in the banking portion, it's telling me that the banks are set up for this sample company. But if there were no banks set up, then the screen would tell me that we needed to add a bank. And so you would add the bank, and this is kind of what the banks look like after you add them. You see the MasterCard is added for the business, etc. Now these numbers symbolize how many things are ready to be categorized. Okay, and so as you see with this cool cars, it says one match found. So here's the invoice for for Cool Cars, and here's where Cool Cars made the payment, and in those situations you would hit match. The essence would be to categorize all of these things so that you can go get your reports, because remember we talked about the profit and loss and the balance sheet. This is a profit and loss statement. It shows the income from each area of income that's being categorized. The income from labor. And this is then for the pest control, sale of products and services. And so they come up with the $8,000 for the income. But you notice it also shows cost of goods sold, which would have been the items here that were sold, and they take that away to get this. Your cost of goods sold for retail businesses are going to be the cost of the things that you sold. If you sold purses, if you sold hair, whatever you sold is going to go in your cost of goods sold at cost, and then it will be reflected in the income as sold, hopefully with a profit. Okay? And so when you come down, then you see it'll give you your expenses, pretty much broken down however you categorized it, which is why the categorization is important if you really want to know where your money is going. And so it shows you what your net income was after expenses, which in essence would be your profit. The goal would be to have a higher profit, of course, but the one thing that the profit and loss statement helps you do, if you look at it monthly, you may see that you're overspending in an area that you don't have to spend so much on. Or you may look, if you keep your inventory, and see that you continuously every month have an auto order in for something that you don't need to buy that often. And by keeping up with this, this helps you to identify with how to save money. Okay. The other thing you're going to want to make yourself familiar with is your balance sheet. And your balance sheet, for the most part, gives you a breakdown of your assets and your liabilities. Because you want to, at a glance, be able to look and see what am I worth for real. Okay, I have $23,000 worth of assets. This is good. But remember that these two, it's a balance sheet, so these two should match. So you have your liabilities, but you also have your equity. Kind of makes sense? This is QuickBooks time. So you can kind of see what it looks like. You would, in QuickBooks, I'll go back to that portion. You put in your employees. You have them put in the information through Workforce. Now the information pulls over here, and they'll show in a list. And time clock, if you create a schedule, the schedule will be here. If they work different projects, you can show them based on projects. If you want to see who's working, you would click this and it would show a little screen kind of like this to show you shows you who's on the clock. They could request time off. It's just really a decent tool. Come out of it real quick so it'll quit spinning. So with payroll, you can add employees and you can add contractors. Of course, at this point, we know the difference. To add an employee, we would go in. You could easily add an employee. We're going to say not right now. We're going to put in their information, and we would hit save, and that would save their information. But you notice On this one it does. On the newer software, it's going to give you the option to send them an email and have them fill out their personal information theirself. With contractors, it's going to be pretty much the same way. You're going to add your contractors. You see here, this is the email. You're going to put in their name and their email address. You're going to hit add contractor. It's going to email it to them for them to fill in their W-9. This is what it kind of looks like. This is the area where you can get a quote for workman's comp insurance and get the insurance directly through QuickBooks. Are there any QuickBooks questions while we have the QuickBooks open? Now, some of you are like, I need to learn QuickBooks, and others of you are like, I don't want to fool with QuickBooks. I know I need my books kept, but I don't want to fool with it. If you
I got a question. It's a situation we were having earlier. And how do I get rid of that portion of it? Because I don't need that pay, that river payroll was part that popped up for me. I don't need that. I'm attempting now to get rid of that so I can go and start doing this other stuff, start getting taxes done. But I'm not having a problem in get rid of that portion of it because I don't need it.
You don't need what? What is the portion? I am confused.
Oh, yeah, I'm thinking, I forgot. You're teaching the class. Count settings is popping. And the one is going to pop back up again for me 1 second.
Okay, while you're doing that, I'm going to finish what I was telling them. For those who do not want to keep your own books and you want someone else to keep them, hopefully an accountant or someone trained in bookkeeping, but whoever it is, on this left-hand menu, it's just as simple as hitting My Accountant, and it's going to ask you the email address, putting in their email address, and hitting Invite. And that would invite them into your QuickBooks so that they can see. Now, I can't speak for all accountants or all bookkeepers, but I can tell you that for Anointed's office, we have different plans. We have some people that either are not at a level yet or forward someone books all month. They just need someone to pop in and do a reconciliation monthly. And so we offer that service where we pop in monthly, get the bank statements, reconcile, and you're back off to the races. We also offer the full service where we go in and monitor and keep your books, do your payroll, and send off your payroll taxes and the whole thing monthly. But whatever your situation is, if you need somebody to get into your QuickBooks and see what you have going on, even if it's just to tell you how to fix it, this is where you're going to invite them. Okay, mileage. I have clients that I really would like to take mileage. In your QuickBooks, you have the ability to track mileage as part of the QuickBooks service. You download the app onto your phone and track the miles. Off you go. Ooh, it will ask you if it was business or personal. I need to get back in where I can actually see. Okay. Were there any questions about any of that?
Not right now.
Okay. Anybody, any questions about any of that?
No, not at this time.
I need to get rid of online payroll call.
Online payroll?
Yeah, that. Remember when when we set up my QuickBooks, remember? We went through me being in school and all that stuff and all that. And now they got me subscribed for QuickBooks online payroll course.
A payroll course?
Core.
Oh, they have you signed up for Core. Cancel it. Go into your settings and cancel it.
That's my question. I'm in settings right now, but I don't see where to cancel.
You don't see subscriptions and billing?
Yeah, I'm sitting there right now. They got update billing information. They ain't got canceled though.
Okay.
Remember, and see, that's what I don't understand. Cause remember, everybody that was set up, we set up as contractors. So we didn't need this at all.
Okay, somewhere in the scheme of life, it thought you did for some reason.
But you got access to it, remember?
I don't. You didn't invite me into it, remember? Okay.
No, I thought I did. We did
No,
that.
you didn't. No, you didn't. I cannot get into it.
Okay, don't worry. We can invite you now.
The things I find myself in the middle of, huh? Okay.
Always with me.
Okay. Were there any other questions? Does this part kind of make sense to everybody? Maybe a little, maybe
Yes.
a lot, maybe none.
Do you have a mailing list? I mean, an email mailing list to like send out when you're having like classes or Zoom?
I will be honest and tell you, in my laziness, I have not in the past, but I will be creating one after this training to make sure that I reach back out to y'all.
Okay, I have to stay in touch.
Okay.
Okay.
Okay. Some of you may be very new in business, and QuickBooks may be financially much, because QuickBooks isn't free, but it isn't really high. But Wave, I don't use because necessarily Wave is free and has a lot of options. And FreshBooks is maybe a few dollars cheaper. Other options to help you keep your books in order. But this is what I'm going to tell you. Actually, since I'm in tax repairs, this is what I'll tell you guys will kind of keep you afloat. So you know how you do your clients, all your clients are separate. And they get it in, of course, turn depending on the software you're using. I know for Tax Pro, one of the first things, the first pages is your invoice. And if you're given a proper will it your unpaid fees, but all banks won't do that. So the one thing I recommend, I highly recommend, it seems like extra work, but I really recommend it, is that you go in and you make an invoice for each client individually. So tax, and you put in your price, basic return, blah, blah, hoot, whatever. Okay? Because then what happens, those of you who have QuickBooks already know what happens when you get a deposit into the bank. It takes maybe about 24 hours, but then it generates here. Right? And so when it generates here, a deposit for $168, you don't know what it goes to or who it goes to. If you have the invoice in there, then you hit match, it's going to pull up all of the invoices, right? Well, in this, it's going to pull up, find other matches. It's going to pull up the invoices that could be a match to, right? So when the deposit comes in, say for instance you have a $10,000 deposit come in, and you've hit find matches, and now it's showing all of the invoices that you have for your tax clients. Now you go through and you click the clients that have paid off, because in your bank report it tells you which clients paid off, right? And then now this money is accounted for, and these people's invoices are covered, but now guess what's left in your invoices? Those that haven't been paid. And so you'll keep getting deposits, you'll keep getting reports, you'll keep checking them off. At the end of the season, what's going to be left? What's going to be left is who didn't pay. So now the invoice is already made, and now you send the invoice to the customer with a due date, net 30, net 60, who cares, whatever. Now you're starting the process so that you can go ahead and go through a collection agency to have them pick it up. Because you can't send a client to collections if you've never tried to collect. And the invoice that's with the return is not necessarily a way to connect. It's just another piece of paper in there, and for the most part they're expecting you to take it out of their return. But if their return has been garnished or anything like that, then what? Calling them on the phone saying, hey, send me my $400 is not a paper trail. It may work, it may not. But when you get ready to take someone to collections and put this on their credit, you're going to need a paper trail. So this is why I highly recommend creating the invoice. One, so your money makes sense. You know what came in for what service. Like you just saw on that P&L, the money was attributed to a service. If I pull my P&L, it's going to show you business taxes, basic taxes, bookkeeping, because I'm going to invoice everything out. And for tax season, I might not initially send the invoice to the client because it's coming out of their refund, right? I'm not going to send it to them until the season has passed and it has not come out of their refund for garnishment or whatever reason. But it helps keep the categories balanced as well. Any questions on that? You guys have been an amazing group. I greatly appreciate all of you who participated. If there's any questions and you just didn't feel comfortable asking in the group crowd, message them to me. I will answer messages. I might not answer them tonight, but I will answer them before the end of the week. If you have a company, take the information and educate your employees or your team. If you have business clients that don't understand structure and are all over the place, share with them the information so they can make educated choices. So right now, people are being LLCs just because they hear people saying and you could put yourself in a place of seeing double taxation. If you're going to be taxed on it, you're going to be taxed on it anyway. There's no need rounding it, driving around in a circle in regards to your taxes, I guess is the easiest way to say it. So educate them. If you're going to do an S Corp, have you a board of directors? Have you a team? So that, because the purpose of going into those categories is to avoid you carrying all the tax load. But you're going to carry all the tax load if there's no one to share it with. Kind of makes sense? So educate your customer. Somebody was getting ready to ask a question. Go ahead. So make sure that they understand. Social media is good for some things and horrible for others. But in this point in society, that is the first go-to point. And so they're following everything they see, and it's not always beneficial or helpful. Um, Remember that if you're going to look for grants, funding, loans, anything, you got to file taxes. I know some tax preparers that don't file taxes for their own business. That's not how that's supposed to work. And it's not that I'm just saying this because we need to be compliant and follow rules. That's not even my personality as a whole. But we have to position ourselves to win if we want to win. And sometimes in order to win a game, you have to play it by the rules. So educate them, show them. If they don't understand how to keep a little money without paying a bunch of credit, teach them about setting up a SEP, a self-employed 401k. Teach them about investing into an IRA. Teach them, I want to say the max this normally is $6,000 if you're under a certain age. Teach them how to invest that money into an IRA or something of that nature, because then it's still their money, but it takes down their taxable income. We have to learn how to maneuver and make it all make sense. Excuse me. With that being said,
Bless you.
thank you. With that being said, are there any questions?
Will the actual presentation, the business presentation, will that be available in the Slack?
Yeah. I will. I'll probably send it out tomorrow, but I will send it out. For those who aren't in Slack, I'll drop it in their messenger.
Thank you.
You're welcome. Any other questions? Then if there's no questions, I'll do a quick round table, and then we can get some sleep till tomorrow. And I'm going to start from the bottom and work in a weird position. So Vanity, what you got for me tonight? Vanity.
Yes, no, I don't have anything. Thank you.
Oh, you're welcome. Thanks for hopping on. Diamond, what you got for me tonight?
I just wanted to say thank you. Sorry.
Oh, you're welcome, darling. I sent you back something that needed a signature.
Yes, ma'am. Is she okay? So she signed it like 2 or 3 times. This is like the third time. And when I go to the physical, like the physical return, the paper return, it's saying it's showing a signature, but for some reason in the app it's not transferring. But her signature is on the PDF version.
All right, then we'll go through. I'll go back into it.
Yes, ma'am.
Unknown. Who is in as unknown? And what do you have for Randall?
Ooh, can I ask a question before you finish, please? Please, I got a question. You know I'm over clicking, and you said you're going to sleep afterwards, so if I don't get you now, I ain't going to get you.
You better text me. We ain't doing all this foolishness tonight. What is the question.
Okay, I'm over in this QuickBooks, right? Company type. It's multiple parties, but we filed it as the fictitious name. We did it that route. So over here, am I gonna go with this partnership for this 1065 form, or am I gonna go with the small business, 2 or more owners for the 1120S?
You're not going to do 1120S. You're going to do a 1065 for a partnership.
Okay, so we legally a partnership. All right, thank
you. All right. Cantrella, what you got for me tonight, lady?
Hello.
Hey, how have you been?
I've been all right. Taking just doing everything as we supposed to do. So, but no, nothing really. Awesome class. Everything was great. QuickBooks. One thing I had with QuickBooks, they some reason we had some type of glitch that they couldn't figure out. So I just gave up. But that was it.
Well, don't give up. Awesome company to deal with. So sidebar me, and I'll see if I can reach out to our rep and see what I can find to help you be able to work in it. But I thank you so much for coming.
You're welcome. Thank you as always.
Coach Janine. Oh, Coach Janine has no audio. She's being slick so she wouldn't have to answer any questions. Okay. Coach Janine, can you hear me? Okay. So, Jermaine, do you have anything for Roundtable?
Great class. Very eye-opening. Thank y'all. And thank you for saving my 30-year friendship. And now I'm doing my taxes now. So I guess that's my part around things. It's been a great class. I learned a lot of stuff. You know what I'm saying? And it actually made me get up and do my taxes right now instead of waiting until next week or so like I had planned.
Okay, well, good. I'm glad you're on the right track. I'm glad I could help. Carlita.
Yes, I want to say thank you. This was an amazing class. I learned a lot in addition to what everything else we got going on.
Well, I'm glad.
And looking forward to many more.
I am so glad. And what I want you to do is Slack me, reminded me to go in and add you.
Okay. I'll do that tomorrow, not tonight.
All right. Thank you. Thank you.
Thank you.
Oh, Tamara, I'm so glad you came.
Oh, I wasn't going to miss the class. It was a wealth of knowledge. So it's a lot. I got some correct answers on some things I think I was confused about. So I'm glad I did attend. And I mean, I follow you like crazy because it's hard to find a true business person who does things the right way. But I wanted to ask, do you offer a mentorship program?
I do. I do. Shamefully, someone told me I needed to adjust it. I charge $49.99 a month, and that is we do a call once a week. They come on to every Wednesday's training if they want to. They don't have to, but if they want to, they're able to come on every Wednesday's training. Because this Wednesday, I made it larger because I invited the businesses, but we do a training every Wednesday on something anyway. I do, actually, I'm telling a whole fib. That's my coaching. That's not my mentoring. My mentoring, I don't call it really a mentoring program, but I take calls from anybody who feels like they need to ask because I believe in divine intervention. And if someone comes to you, they were directed to come to you. It wasn't an accident. So I do that. Now, we're still supposed to go do lunch. My butt is just always in some type of weird situation.
I know you're busy.
Making me busy. So I didn't forget. It's just insane over here, and it's insane not just because it's tax season, but because I do everything. I got hit with 1099s and W-2s for clients. So right before tax season, and right now, you do business formation also, so you know it's time for annual reports, and it's just been insane. Plus, I have a lot of my clients are, how can I say this politically correctly? I know they were sent because I could help them, because most of them go into business with going to school for business. They just say, hey, I'm going to chop down trees. And that's what I'm going to do. Or, hey, I'm going to cut hair or whatever. And they just hop in and just do stuff. And so they need the balance, if that makes sense. And sometimes giving the balance isn't necessarily easy. It's always fair for me because it's hard to get me any balance either. So I just get back what I give to my to my mentors. But that's why it's so hard to get me. But you can call me. I think you have my direct number. You can call me anytime. And for those of you on here, not just Tamara, but any of you on here that do taxes and want to learn more about business taxes, I do have a business tax class. The class is $199. It covers 1065s, 1120s, 1120Ss, and it recycles back over Schedule Cs. And I want to say I touched a little on joint ventures because that is one of the most overlooked status. But it's the best for a married couple, because a married couple in business together, even if they're not an LLC or anything, the IRS automatically considers them partners because they're married. So with the qualified joint venture, they would both file separate Schedule Cs, both get the SE in so they have their Social Security and Medicare taxes covered. It's just it just gives it a little more balance than a married couple going in and trying to be a corporation or something like that. The other thing, while I have you guys, I know I'm in Roundtable, but I almost forgot this. Here's another reason why your self-employed need to file taxes. So I have a client that is close to 70, and he went to apply for Social Security so he can have the medical insurance portion or whatever it is, right? And so they told him he could not apply yet, even though now he's 70, because he doesn't have enough points. And they accumulate points kind of, I guess, by paying in and filing taxes and whatever. Some kind of way they accumulate these points. And you have to have X amount of points to be able to participate in the Social Security benefits, Medicare, Social Security, Medicare provided benefits, what have you. And so them not filing, whether they owe, get a refund, whatever, them not filing at all keeps them from accumulating the points they need. So that's the other reason it is important for the self-employed to file, because when they get older, they may need it, and they want to have all of their points. So I almost forgot to tell you guys that. But, Tamara, I cut you off because I'm just so talkative. You can finish giving me your roundtable. I'm sorry.
No, that's fine. You got other people to go to, so I'm okay. I'll message you.
Okay.
Yes,
definitely message me. Nanique, you got anything for roundtable?
I did. it was about, well, similar to the QuickBooks instruction that you showed us. I recall, and I just wanted to verify that you had given us a tip before when using the QuickBooks and the ways and things like that. I just wanted to make sure I understood it correctly, and it was that for our client's invoice, for our clients, it was a tip to make or create invoices. That way we had a way to be able to follow and track the income that we're grossing, and then to create a bill for our contractors or our tax preparers as their actual funds come in, so that way, when we pay them out, we'll just pay out the bill and everything will be reported. Do I have that correct?
Yeah. So that is exactly what I said, and I didn't cover the bill portion. I just covered, in this training, I just covered the invoice portion. But since you bring it up, I will, because it looks like everybody on here is an active preparer. So that is how I handle the preparers in my office. So we went through, we saw we can set up our contractors, and it'll send them and it'll give them their W-9 or whatever. But when I come over, so I'm going to go into my expenses, and I say, and so we have vendors and we have contractors, right? And so when we go into our contractors, we add them. We can prepare their 1099s directly from here. We don't have to have anybody else do it, and we can view their payments. So, of course, in the sample company, there's no payments. But if I go into expenses and I go into bills, when I hit add a bill, I can create the bill. And then I'm going to go in and I'm going to put in my contractor. We'll say, do I have any contractors in the sample company? We'll say, for sake of anything else, that they're a contractor, we're going to put them in. And they're billing me for, and I may put in basic tax, which isn't going to pop up because I'm in a sample company. I might put it, so we'll say advertising. I'll say advertising. And in the description, I'm going to put the person whose return they did. So I might say bill. And what is their amount? Their amount is whatever their percentage is. I'm not going to pull the full amount that was charged to the customer unless they make 100%. If they make 50%, and the amount is going to say 50%. If whatever, it's billable to the customer whose invoice, right? So I'm going to put in, we'll say Amy's Sanctuary. They did Amy's taxes, and Amy's taxes were $400. They're a 50% puller. We're going to say $200, and it's billable to this customer. So I can save, and if I know when it's going to drop, schedule the payment. So we know that we have a lot of people paying out on the 23rd, which is tomorrow. If I know that this particular contractor has this return that's paying out on tomorrow, I can hit save and schedule the payment date. And it's going to send them the payment on the day that I have set it for. Kind of makes sense? So you see, if I do the scheduling for it to just automatically pay, it's going to charge 2.9%. But I can also have them send a check if I want them to send a check. It's just all up to how I want to set it up. Now, I'll be honest and tell you, I never schedule it because I use Zelle. Zelle comes directly out of my account, which then it reports directly to my QuickBooks, and then I hit match to show whether the Zelle payment went out and it matched this bill. So then that shows them paid off. So when I come back here at the end of the year and hit prepare 1099s, it's going to pull all that information. I don't have to do anything manual, look for it, add it, type it in. It's going to pull all of the information, and it's going to put it in the 1099 for me. Does that kind of make sense?
Yes.
Thank you.
You're welcome. And for those of you guys ready to get off, I'm sorry. When she asked that question, I had to go back and make sure I made it make sense for everybody that was hearing the question and the answer. Ms. Cent, what you got for Roundtable?
Okay. Training tonight, as always, was very informative. All my questions were answered, and just wishing everybody a prosperous tax season.
And you as well. You as well. I hope all of the businesses are going well. Like I say on every training, anybody looking to have a dress made for an event or anything like that, Miss Cynthia is a seamstress. And in this day and time, it's hard to find them. But she still yet does this as an actual business. So you guys go at her on Facebook and holler at her when you need some real
All right.
seamstress work.
Thank you.
You're welcome. And Tamiko, tell me what you got for Roundtable, because Will always has to go last.
Okay, I was screenshotting Cynthia's email right quick.
Okay.
No, my main thing tonight was I wanted to know if I pay my quarterly taxes, like, because I was like interested in it after I seen how much I was owing. And out of this class, I got mostly the business part, far as constructing your business, business structure, because I have a lot of clients who have all these side jobs or trying to start a business and they don't know how to structure it. So I figure if I can learn the max, to learn everything I need to know for structuring the business, I can teach my clients how to structure their business so they can file them properly on their taxes.
Why prepares in the training, because let's be honest, our clients give us a whole pain in the tush when they receive boxes full of receipts, when they don't know what kind of business they're in, when they set up the wrong thing, and then when they set up the wrong thing and then we tell them they have a tax liability and then they're mad at us.
Yep.
All of that is just year over year.
One guy told me, he was like, I got to gather my receipts. They're all on the floor of my car. I was like, you can keep all those receipts there and count them up yourself.
So hopefully, because people come to you to do their taxes because they trust you. It's hard for me to believe that our customers bring their financial information and not trust us. So if we give them advice, a lot of times they may give pushback while they're talking to us, but they go try it later. So definitely, I'm going to send you guys out the PowerPoint. So if you didn't get a chance to take good notes, that you at least have the information. And definitely, if you want to take the PowerPoint and set you up your own little Zoom and teach your clients, I'm not offended by that. The only thing I would ask is, since I didn't charge you, that you don't charge them with the PowerPoint. You know what I mean? But I can't even enforce that. I could just ask, let's each one teach one. But Will, what you got for Roundtable?
Nothing.
Lies.
I'm tired. I'm in pain. I'm ready to go to bed.
You're tired and in pain. Well, I hope you feel better.
We didn't take a painkiller.
Oh, goodness. It's bad for your stomach. Be careful. I'm glad everybody participated. Most of you have my number or have me on Facebook or have both. So if you have any questions, please don't hesitate to reach out. I know if you look at my post, you may be like, she bougie, she funny acting. I'm really not. If you ask a question I don't know, I'm going to tell you I don't know. If you have a question I can answer, I'm going to answer. And if you have a question that I can give you a resource for, I will. I might take longer to answer, but I'll send you the resource, because each of us are building the path for the next generation. So for me, there's no you guys are not competition just because we do taxes or we do bookkeeping or we do whatever. It's important that we learn to collab and help each other grow, because we're each in different states, dealing with different people, and need to help grow what has been torn down in our community. So thank you for joining. Thank you for participating. Anthron sent me quite a few topics that I will lay out some presentations for. If you think of a topic that you would like for us to cover, please don't hesitate to send it to me. These are classes that I don't pay for, not because I'm rich or I'm balling, but just because I don't. So if you want to send a tip or a love offering, my Cash App is PLP Studios with an S. It is not mandatory. You do not have to, but if you just feel in your heart like you want to, I'm not too proud for tips. And you guys have an amazing season. We're all here to help each other. So if you want to be added to Slack with my initial team, just send me a message and I'll add you so you can ask questions and kind of bounce stuff off. We all help each other in the Slack.
What's the Cash App again?
$ PLP Studios with a S.
Okay.
And I will add you guys to the Slack. Now, I'll be honest and tell you sometimes there's a little lag with Slack questions. It may take me 30, 45 minutes. It may, or Will may answer before me, or Courtney may answer, but we will all answer in the Slack. We use it when we're in returns and each other needs help. Sometimes it'll be a lengthy answer. Sometimes it might just be a link to where you can find your answer on the IRS site. But we try to be a support system for each other. As everybody hears, Jermaine talks freely. He talks freely in Slack also. Okay. So it's also a place of, it's like a safety net if you need to vent. This customer just made me mad. We understand. We're all doing the same thing. We understand the crazy customers. So we even respond to that. So I don't want anybody to ever feel like they're alone. This is a very strange season. There's a lot of shifting going on in the atmosphere. A lot of gravitational pull, weird weather. It's just very crazy right now. So I don't want anybody to feel alone, isolated, or friendless. So with that being said, I will tell everyone, be blessed and have an amazing night.
Good night.
You too. Good night.
Good night.
Thank you.
Thank you.
Thank you.